We've got with us Sivaramakrishnan Ganapathi, who's the MD at Gokaldas Exports, as well as RK Vij, who's president the Textile Association. Thank you so much, gentlemen, for taking time out and joining in. To begin with then, Mr. Vij, given the fact that recently you have the ready-made garment exports in May, that showed a smart recovery after dipping about 17% month-on-month in the month of April. What is the outlook in terms of on-ground checks and how should we look at exports in this context? Sir, just requesting you to put your audio on off mute so we can hear you.
Audio.
Yes, go ahead.
Okay. First, thank you for inviting me to say a few words. After COVID, the textile industry worked very well, and 1 year it was totally all EBITDAs were very good. Everything was going good, but from the last 2 quarters, this industry is not doing well. There may be certain reason that export is down, and the requirement from EOU company and from USA, etc., that import is not there, so our export is down. And another thing, China is sending material to India. So this is the one reason that garment export is down. But now looking the next quarter, we hope from September onward, things will be better. Government is working on that. FTAs are working on that. So our Prime Minister's fiber to form, and then our Piyush Goyal ji, Textile Minister Darshana Bahan ji, and our Secretaries of Chemical and Petrochemicals, Mansukh Mandavia ji, they are working well how to increase the export, because our government has fixed a target of export, total textile export, from present $40 billion to $100 billion by 2026. And some of the PLI scheme, FTAs, PM Mitra Parks, the government are coming. So they are giving something better for increasing the man-made fiber in India. The only problem, 2 or 3 difficulties are problems are there, because the cotton can only cater about 15% of the total textile. So in the man-made fiber, one is the raw material, we are in short of supply. PTA MEG is the raw material for India. So we are not getting at the international prices. If you see the total demand, total capacity of PTA in India is 64 lakhs ton, and production is around 58 lakh ton, after running 90% all the 3 plants. But the actual consumption of the downstream industry is 73 lakhs million tons. So this is a one difficulty is there. We are not getting PTA and MEG at international prices. So the cost of our garment downstream industry is more. So we are not capable to compete the international market. Second thing is also there in the downstream industry, the cheaper, lower quality of import of POY and FDY is there from China only, and we have the surplus capacity. So looking to all these things, the government is coming with BIS scheme, so Bureau of Indian Standard. So I think from July, August onward, our export will go up, or in domestic market will work well.
Sure. Mr. Vij, in continuation to that, I also wanted to get your sense in the home textile space. On account of higher inventory levels with global retailers in the past, it was one segment which was the worst hit. Has the situation improved now?
What happened in the last 1.5 quarter, the raw material, PTA, MEG is going down. If you see in last 1.5 months, the raw material has gone down by 8 to 9 rupees per kg. So, the garment is not made on day-to-day basis. Garments, fabrics are made on long-term basis, 3 and 4 month advance. So everybody was thinking the raw material will go up, cotton prices will go up. So they booked the orders and they produced it. But when the raw material has come down 10 rupees kg, so the importers, the big brands have not lifted material on right time. Even in Ludhiana, if we'll see some of our exporter complaint us that they have the ready stock, but they are not lifting. But now the market is improving, and this from June and onward, the lifting will start. Even in some of the Indian brands also not lifted, but now they have started lifted.
Okay, so that's the take coming in on how the demand trend is panning out. But Mr. Ganapathi, wanted to bring you into the discussion and talk about how the margins are also panning out. What we understand is the fact that cotton prices have seen a bit of a dip recently. Has that started flowing into the margins already? And for yourself particularly, when will we see the margin profile of 13 to 15%?
So, margin is a function of what pricing we get, what is the demand supply situation, and of course, raw material prices. Raw material prices are soft because there is a softness in demand for end user garments as well in the global markets. So this has to pan out. In my assessment, it'll be another couple of quarters before which the demand should start seeing an uptrend, and there are indications for that at the moment. And if that happens, I think it will help in overall demand. And again, margins are a function of all of these, plus how efficiently you run your own operations. People will try to improve their margins because that trajectory will continue. But let me get on to the longer term narrative, because we oftentimes get caught up in short term narratives saying that there is a demand headwind, etc., which is a fact. The longer term, prospects for this industry continues to be very strong. The movement away from China, particularly for US buyers, is very strong. As you can see that from data as well, that the share of imports from China into US has consistently come down, and that trajectory continues. Most of the brands are looking at alternate sourcing, and India figures high on the radar and amongst the brands or the buyers. So we have a great opportunity. Plus, Government of India working on FTAs, etc., can also help increase demand from this region. If UK FTA happens, that will have a great positive impact for Indian apparel industry, and so would a Canadian FTA as and when it happens. These are all work in progress, as I understand. So that narrative is pretty strong for the industry. I would say, a 3-year horizon, Indian industry, especially from exports, will be having a good time.
Okay, so the medium-term prospect looks bright, but since you're talking about the China Plus One strategy, India has been facing a lot of stiff competition from the likes of Vietnam as well as Bangladesh, etc. as well, right? Could you talk to us about the incremental market share that we are seeing of the orders which are coming out of China? What percentage of that is going to Vietnam? What's going to Bangladesh? How does India stand in the pecking order?
Historically, a big chunk of what came out of China went to Vietnam. Because of proximity, because of deep ties to the upstream industries, which is fabric, fiber, etc. I think increasingly with Vietnamese costs going up, people are looking at alternate locations. Bangladesh and India, and to a smaller extent Indonesia, are the beneficiaries. So we are seeing incrementally a lot more coming to India. The share that we have captured from China is still small, but I think the future trend would be much better given our cost structures vis-a-vis Vietnamese cost structures, which are very high, and Bangladesh will also soon catch up on its costings. The minimum wage revision is due there somewhere end of the year. Their own costs are going up. So India will become comparable or competitive soon.
Okay. And Mr. Ganapathi also wanted to understand what the outlook is, because you have managed to onboard about 2 clients in Q4, one from the US and the UK. When do you expect these clients to start contributing to your top line, and are there any other deals in the pipeline that could help your overall market share?
So we're constantly working on, adding customers. So that's, perpetual work in progress. These customers will ramp up through FY24, but a significant contribution from them will come in FY25. So all of these relationships start small and then mature. So I would presume that all the effort that we are putting in is going to yield fruit in FY25 and beyond.
Gentlemen, great to have you both on the show. Thank you so much, Mr. Ganapathi, Mr. Vij, for taking the time out.